All right, so here we go. So let's do a follow-up video here, guys. So today we talked about breaking points in the market. So play today's first video. It was on breaking points in the market. So I'll do a really short, quick video on a recap. The recap is this. We have these zones. So we have buy zones and sell zones. These are our proprietary zones. Here's our green zones. Then we have red zones, right? So there's our green zones. There's our green zones, and then we have our red zones over here when the market's in a downtrend. Green when they're in an uptrend, red when they're in the downtrend. Then above the zone, we have our trend zone. They run parallel green when it's an uptrend, parallel red when it's in a downtrend. And so yesterday was a parabolic move to the upside, and we did a video on that yesterday, so I'm not going to recap yesterday's price action. We did a morning video. So this morning at 8:30, we did a video on this about yesterday's price action. And the day before, I did a video on this price action. Well, I want to talk about breaking points in the market because this is a projected breaking point that we talked about in this morning's video. So if you're new to this system and you're trying to find out how to find daily breaking points in the market with our zones, then replay the first video we did at 8:30 this morning. And now it is 11 o'clock right now on the same day. And we're going to show you how this projected short solidified and went down to our targets that were projected an hour and 20 minutes before it happened. These are leading indicators, not lagging. That's why I like doing a pre-market video on Wednesdays, Thursdays, and Fridays. I give you a pre-market video of breaking points. And then we like to do a follow-up video to show you that these do not repaint. And these are static, these levels, these zones do not repaint. So we actually have another sell zone coming up right now in the market as the S&P is moving up. When we're doing a follow-up video, if we get a yellow reversal candle, meaning an entry reversal candle, this will be another short coming up as we speak. We're right into the zone. It cannot break the line in the sand right here. So the line in the sand is 89.5. So let's take a look at this big short that happened this morning. So since we know that we have these zones, these buy zones, right? These buy zones, yesterday the buy zones never broke at all. There's a line in the sand that is at the bottom of these zones, and I go over this in the previous 3 or 4 videos that we just posted. All right, there's your line in the sand. Notice how the never closed below the zone at all. Okay? So that means we're in an uptrend. So you look for the market to come down, give a reversal candle, and take the market to the upside. If the market ever breaks the zone, here is what we like to do. We like to look for a liquidity grab back inside of that market structure. So this is the first video we did this morning, 8:30, and I talked about how 93 is a breaking point in the market today. Right there, 93. Why 93? A couple reasons. One, 93, let me get this off here. That was our last projected buy zone. Here, there's a low, there's a high. Line in the sand will be the low of that of this level. So if I project it out, you can see they try to reverse it here, which is a buy signal, potential 03.5 to 07.5. And then this morning at 7:30 in the morning, 04.25, high is almost 10. So they're reversing it inside the buy zone. So I went over this morning's video, so please play the first video to understand this. I said, where would be the breaking point in the market? It would be 93. Why? That's a low of the line, the last line in the sand right here, the last low. Sure enough, an hour and 20 minutes later, the market broke. Now, we don't want to just look blindly and after it starts closing a couple closes below the line in the sand, say, hey, let's get short and take it to that side of the market. We want the market to pull us in and confirm that it's grabbing liquidity, meaning if the professionals are going to take the market down, they're going to have to grab the wrongly positioned traders to grab liquidity so they can get short the market, right? So you can't just do 100 contracts, 200, 300, 400 contracts and say, hey, let's go at the market and let's take this down. What the institutional traders and the professional traders like to do, they like to pull the market back and grab liquidity. All these little stems right here, are pulling back and grabbing rolling position traders. All these little stems. That's called liquidity grabbing. So what we want to see the market break. If it breaks my line in the sand, I want to see that intraday spike, intrabar spike inside of where the zone was. It happened here and closed back red. It happened here and closed back red. You had 2 shots of going short this morning when I said 93 is a breaking point in the market. And it was exactly the breaking point in the market an hour and 20 minutes before it even happened. We start talking about this at 8:30 in the morning at this level. So there, and I'm going to show you how we have our projected targets, how they hit both of our targets. It happened a few days ago in my video a few days ago. We talked about it a few days ago in a video. We said market structure, the line in the sand, is the bottom of these zones or the top of these zones. So it's not when you first close below these zones. It's when you get a liquidity grab back inside of that zone, and it's telling you that the market is trying to grab liquidity to break it to the downside. And it did it again, played a couple of days ago in the video, 79.25, and it just got taken to the woodshed to the downside, all the way down as low as 46.25. So then it had a confluent short on the way down, confluent short, confluent short. So not only can we have trend continuations with zone retracements, some of the top trades you're going to get is breaking points in the market when they grab liquidity when they break the zones. So this is a setup that we talked about this morning. I said 93 break right there. There's a liquidity grab. You want to see an intra bar go back up, close below it. There's your first opportunity at 92. It got as low as 68 this morning. Here's your second opportunity, 90. Got as low as 68. Over 20 S&P points. Now, where's your targets? If you're just now, some of you guys have my symmetry dots. I know we have a lot of traders around the world that use my symmetry dots for targets. You know, they'll use the first symmetry dot for targets, second, third symmetry dots. A lot of traders use those, and they love them. So you can use that symmetry dots, but symmetry dots are not market profile. What I like to do, I like to look at previous market participation. So this morning in our first video, we projected where this market could go. How do we do it? Well, it's not my opinion or your opinion, like I said, or Gerald's. We want to use where the previous market of all the participants in the market, this is our market profile, our 2 to 4 hour rolling market profiles. We want to see where the market participation is. So what's neat is like if you play the first video, I said before this happened, an hour, 20 minutes before the break, I said, look where high value area is yesterday. It's at 93.25. 93.25. Where's our breaking point on my zone? That I said the breaking point would be 93, exactly 93 was the low of the zone. You have confluence. Now we're looking for a break in 93. There's your pull in. You kind of pull in either one of those. Pull in here, pull in here. Where's our target? Market profile. Look where the targets I put up at 8:30 this morning. I put these targets up at 8:30. The market started breaking down at 9:50, an hour and 20 minutes later. It broke our zone. It broke market profile. Where's my target? These targets were projected at 8:30, 82.5, 70.25. 82.5, 70.25. So you can put those on your chart when you're breaking down. 80.5, 70.25. Almost caught the low. Look at that. Almost caught the low. There's your first target. There's your second target zone. There's your entry. So what's the next entry? Very simple. Here's the line in the sand. If I continue to hold, the market holds below this line in the sand exactly at 89.75, that is your line in the sand, then the market looks to go lower. If it breaks above the line in the sand and starts closing outside of it by a couple candles, you'll look for the first liquidity grab to pull you back in, side of the zone, and then close back up green, and that will be your first entry. and then it should pull back and start a move to the upside, just like this. These are critical breaking points in the market. And I just showed you with today's video how you can project this. This was projected in an hour and 20 minutes to the exact level, 93 to the exact level breaking point. Use the let the market pull you in. We don't guess at this stuff. You know, I don't know where the market's going. You don't know where the market's going, right? There's no guarantees in the market where the market's going to go. So how can we have an advantage over our trading opponents? The advantage comes in when the spark money grabs liquidity. And when they grab liquidity, you'll see these little stems up in price. Well, these little stems up in price, we want to time it when you're breaking major support or resistance. So when you're breaking major support and resistance, that's how we do it. And we did it again today. So play today's video. They'll show you how I'm going to keep doing this on Wednesdays, Thursdays, and Fridays. Show you the critical breaking points. This is an hour and 20 minute heads up on this critical breaking point 93 today. I gave you the targets, almost got the low on the second target. I mean, think about this. This was from 92 all the way down to 68.5. All right, so that's your critical breaking point. So play that, replay that. You guys are good to go. And I'll be in here tomorrow at 8:15, and we'll do it again. We'll do it again. The projected 93 break worked out great for us. And that's how you want to enter it off of when the intraday bar gets inside of that break of that zone. That's how you want to time these runs. The old software used to be called a failure trade, right? The market's failing. It's the same concept. Our concepts never change. Ever since we have the trading room, I know that we have this indicator and that indicator, this indicator, but the concept has never changed. Ever since I learned from Larry Williams and Tom DeMark, two of the top traders in the entire world, in my opinion, and then obviously Pete Stoudemire with Market Profile, you gotta buy and sell retracements of trend. But like Tom says, the trend's your friend unless it's about to end, right? Well, this is when it ends. When you break Market Profile, when you're breaking these zones, the trend's ended. Let's take advantage of it. All right? So that's how you do it.